Hey, what's going on, guys? Happy Wednesday. What was it February 23rd? The day after 222222222. All right. Yeah, welcome, guys. Welcome to the stream. This is Obe TA. Scan the charts, apply technical analysis to them. Try and make a little money in this bracket, right? Know what we do here. If you're new, maybe you don't. If you're old, maybe you do. Let's get into it. Frosty! All right, guys. We're going to start off with Bitcoin like we always do. And some interesting stuff going on in the market today, specifically with the indices. The S&P, the NASDAQ. We'll take a look at them, but not looking hot. Haven't been looking hot, but just continuing to confirm and get closer to potential devastation, I guess, right? So just a little bit, a little freaky, but let's take a look and see where we're at. So, yeah, I mean, just looking at Bitcoin here, move it to the daily. All right, we are, in fact, the daily candle closed about 5 minutes ago, 5.5 minutes. All right, this guy right here, not really much to it. Kind of just you were above, you are now below this major inflection point from back here. And I mean, can you really even call it a major inflection point? It was kind of just a support back here on August 4th that had held once, right? Recently, February 3rd, was seemingly holding again before, guess what? Now you're back below. So it's a nice try. But you did, in fact, close the body below it. So, again, that's the next step. Get it back above there. But let's see. I mean, just looking at the daily, nothing really as far as bullish. I mean, hold on a second. So, oh, nice try, dude. Nice try. Nope. Tried to trick me. All right. Back from your actual negative momentum as far as the MACD is concerned, you certainly have some hidden bullish divergence that's trying to develop on the daily here. Okay. It is. The histogram went light red. Cool. At a level of support. We'll see what that can do. You do not have it on the RSI. You only have it on the MACD from that point. So I always say it on here, if we don't get the RSI divergence as well as the MACD, yeah, you might get a little bit of a rally and move up, but with the wall of resistance you have ahead of you, and we're talking about 40,000, 39.6, right, 42, all of this, the 50 moving average. Without that RSI divergence, it's just, I don't see it being likely that you break through. We put in a Fibonacci now. If this is the bottom that it's putting in, and it's going to try and rally from here, I mean, now you've got, you know, the fibs to get through as well. So the 50% retrace from this high to low, lining up right at 41,000, this point back here from December 4th. So, and this peak back here from January 8th. So it's just, you have a lot of work that needs to be done before you can start to say that Bitcoin is back in the uptrend or is bullish. Okay, if all you have is just a little bit of hidden bullish divergence starting to try and develop today, it's really not a strong argument. And we can move it to the 4 hour just to try and see if it holds any water on a shorter time scale. And on the 4 hour, I mean, we can see right here, you have hidden bearish divergence. Right, so you've got the lower high going on, higher high on the oscillators. So signaling on the 4 hour continuation to the downside. You haven't even gone negative in the momentum yet. It's just, you cannot be making the lower highs in the shorter term moves. All right, you gotta start getting above and holding the highs and making higher lows. All right, so 4 hour hidden bearish divergence, and as I just said, on the RSI, you want it on both. On the 4 hour time scale, you've got hidden bearish divergence developing on the MACD and on the RSI, right? Implicating stronger divergence, implicating continuation to the downside. All right. Move it back to the daily to try and see where the next support would be. Possibly 36,315 again. There's not much else looking left to justify that. So if you're just trying to bank off of these two lows, this in itself right here, this February 22nd candle, was kind of the test of trying to hold that support. So the fact that you got above 37.4 and you're now below it again, at that point with the hidden bearish divergence, it's like you just go to 32.9, right? Just go back to this low back from January 24th, okay? That makes much more sense than a rally up from this point to all-time highs or to even retake 45,000 again. Like, you have to retake this high back here in order to be bullish on the asset, and you need to get through all of this crap to get there. So with what's going on the indexes and what's going on just here with Bitcoin itself and price, dude, I don't see why it would do that. So likely going to head back down to 33,000. And with what the indexes were doing, indices, however you say that, dude, I don't know, man. I don't see how they get there. But, you know, at least in the short term. Cool. Let me take a look at the weekly real quick. We got 4 days for that to close. All right, and the weekly, I mean, just kind of confirmed a little evening star pattern here. So just more bearish Japanese candlesticks going on. Throw it on top of the pile. But, yeah, not a whole lot to say on Bitcoin besides the fact that you're now back below that that level that it was seemingly trying to hold. So continuation to the downside implied. 33,000 is the next level that we want to look for. Just we can get any kind of edge or something, get some divergence or something down there. Right? That's what we want to look for. And at this point, it looks like it's starting to enter into a Wyckoff accumulation phase, with this being, you know, the selling climax back on January 24th. Still monitoring that. Seems to be following pretty well, but I've been looking at that since February 9th, which implied we needed a lower low than 33,000. So that lower low would most likely be 30,000 back here. I think it's 29, these lows back from July. So let's see if you get there, man. If Bitcoin is following the stock market, then that would be an indication that we are definitely heading low. But let's see if the hidden bullish divergence on the MACD daily by itself can usher in a rally to the upside. All right, cool. Let's move it to Ethereum. This is an interactive stream, by the way, guys. So anybody's in here, anybody pops in, if you have anything you want me to take a look at, any crypto, stock, you know, metal, commodity, doesn't matter. As long as it has a chart, take a look at it. I'll just look at it live, man. It's all free. All right, this is for education purposes and to just have a good time. All right, so taking a look at Ethereum. Okay, on the daily candle, kind of similar to Bitcoin, upper wick kind of stuff. They get back above this inflection point back here from September 20th for a little while today, but ultimately came back down and closed below it, which is just not good, man. It's confirmation of it as resistance. So just not what you want to be seeing, right? Ethereum has this trend line that's been going back since December 1st. So first you need to get back above this inflection point, 2661. All right. Then you need to get above the 50 moving average and that trend line that has been touched now, what, 1, 2, 3, 4, 5 times. Okay, so, all right, every time it gets up into that level, it just sells off. Now, there is no divergence. All right, there's no divergence on the daily time frames, no bullish divergence. All we have is the hidden bearish divergence. Right? Unlike Bitcoin, Ethereum never got back above its high back from January 16th, which it needed to do to wipe out the argument for hidden bearish divergence. Not do that. You completely sold off, went negative in momentum, and essentially confirmed the continuation of the downtrend on a daily timescale. And when you confirm the continuation of the downtrend, oftentimes you need to make a lower low than the low that ushered in the divergence. That makes sense.
Right.
And if something doesn't make sense, dude, just stop me. I know I can ramble sometimes. Let me know. I'll stop and give a little explanation or something. But yeah. So even rejecting it, you're starting to go towards the positive area, I guess, on the day. But it's kind of like it's almost faking away. Like this little green candle. Okay, sure. We move it to the 4 hour. All right, 4 hours about to get a death cross. As far as the 50 moving average crossing over the 200 moving average to the downside. let's see. I mean, you definitely have M shape going on. Let me see what kind of potential harmonic we have going. Yeah, so I mean, we got the potential bat going on down here. Put us right around 2,290, 2,300. So we can just leave that there, just something to keep an eye on as far as a possible reaction point. I don't think, just moving it to the daily, like we might get a reaction there on the 4 hour. And depending on the performance of it, again, would just give further indication as to whether or not we're just heading to 2,000, which is where this asset looks like it wants to go. Ethereum, this mega bullish shark that we have, that we've had since July, right? Or that has, I guess, the wave that it is forming, puts the pattern completion zone right down there around $2,000. All right, just like a lot. We've been talking about this forever. So get it down there, get some kind of divergence or something at that point. But hey, I mean, this is a valid bat harmonic presenting itself here a little more locally. But even that, right? We might even just move it, zoom in a little bit actually. Let's move it to the hourly. And on the hourly here. Yeah, so even like see this on the hourly here, right? This is been touched a couple times, broke out of this trend line. I mean, we could even move it down a little bit, gets the 3 touches, right? So this little local trend line that we had on the hourly, it broke out of it earlier today. Broke out of it earlier today for a little while before dumping back below. Like, do you understand that this kind of stuff, not even just a little bit actually, earlier on, this is all from the 23rd, this is all from today. You broke out pretty majorly. See what I'm talking about? Broke out here before coming back in below that trend line. So it was like you had a break, it's just like a fake out. You had a false breakout on the hourly that looked pretty good throughout the day before ultimately coming right back in below. It's just, when you're getting stuff like that, like something bullish happens, just to immediately be turned into, you know, continuation and a bearish trend, it's just like confirmation of the trend itself, of the downtrend. So nothing great about Ethereum right now. Caught a little bit of a reaction off of the bullish divergence that I had here, but look, it immediately turned into hitting bearish divergence on the 4 hour as well, even more locally. See what I'm talking about? So we got higher highs on the oscillators, lower high in price. So it's, again, 3 histograms, hasn't even gone negative yet. It's implying continuation to the downside, at which point, change the color of this. I break it up a little bit, but yeah, at which point you head down to this peak back here from July 5th. This is the inflection point to 2004.20 that we're looking to hold. So between that and then the pattern completion zone of this bat, somewhere in, put a little, somewhere in this, all right, we could see some kind of reaction. Does that mean that that's going to be the bottom where we reverse the trend overall? No, it might just be a little reaction, that whatever it does, just something to keep an eye on. But this bullish arc, this is the type of structure harmonic that can usher in a true trend reversal. We're talking, I mean, it was back from July of 2021, July 20th. So we're talking, what was that, 6 months? My brain with dates and stuff is terrible, but like 6 months, right? 7, something like that. 7 months. But yeah, that's what we're looking for. Got it? Cool.
Okay.
All right. So it's on Ethereum, man. Continuation to the downside implied. That inflection point, 24.14. Haven't gotten there yet in this last run, so that seems to be where we're heading. All right, $2,414. Cool. Let's take a look at the total market cap. Same kind of thing. And so the market overall on the daily had that hidden bearish divergence continuing to develop. Actually, today, starting to try and wane back towards the upside a little. Not hidden bullish divergence or anything like that. This inflection point from back here, right? Holding on to this support back from April of 2021. It's at it. But a similar kind of thing. It was like you had a decent candle February 22nd. Earlier today, you got all the way back up to this inflection point, which was once support back on September 21st, before rejecting off of it, coming down, and closing. Like basically, inside the candle. So, it opened here to the top, closed down the middle here. So, upper wick stuff, just confirmation of rejection, selling up here. This is the opposite of what you want to be. Now, there's definitely an M structure here. I'll take a look at that, see. But, yeah, as of right now, unless you make a lower low than 1.6 trillion and have a higher lows on the oscillators, you don't have any kind of bullish divergence. You're treating the 50-day moving average as resistance. You've done it twice now. And when you make a high, and then you make the lower high, right, especially at the trend line, just confirming this trend line back from November 10th, it's just distribution. It's just confirmation of selling, of rejection of selling. There's nothing bullish about that. You need to be making higher lows, higher highs. If you're not doing that, there's just no reason really to be taking longs on the right? If the trend is your friend and you're trading with the trend, once you trade with the trend, so you're in a shorting environment right now. You catch relief once it gets up to a major support resistance, whatever it is. That's when you look to take the short position. Until we start getting real divergence or anything like that, that's just the way it is. All right, so you break down below this 1.6. I know this July low. Yeah, what's that? The 786 down there. $786 from. All right, the 113 influency there. That's what this green box is. All right, from the low September 21st to the all-time high, the 113 fib extension, as well as the support back here from March 25th. That is the zone of support, as well as more locally here, late January 24th. But currently trying to hold on to this support from April 22nd. See if we can hold it. Let's move to the 4 hour to see what tomorrow might look like. Hidden bearish divergence. And you just had a death cross on the 4 hour time scale. The 50 moving average moving over that 200 moving average, as well as developing hidden bearish divergence. Dude. That is not good.
It's a piece of crap. It doesn't work.
Not good at all. So, we'll see. We'll see if this holds, but I doubt it. All right, and the next support, like $1.5 trillion. So we got a further, what? At that point, we got a further 8% the market overall to go down. Nice. You. What's up, dude? Welcome. Maybe take a look at Essen on the Philippine Stock Exchange. Yeah, I'll try. That's definitely a new one, but I'll try to take a look. Welcome, man. Good to see you. Essen. But yeah, continuation to the downside implied. Next support coming out around 1.5 trillion, 1.5 trillion. All right, getting back into those whole numbers makes sense, right? Let me take a look at the weekly real quick. All right, if you can get a higher low than that $1.3 trillion, yeah, I mean, on the weekly, you'll usher in some hidden bullish divergence. Cool, but you're now below the 50 moving average and everything, right? I don't think this is going to be the pivot to the upside to get that low. So likely you've come up, rejected the 50 moving average again, and you'll come down to the only real support, which is this low down here. All right, that's like I don't really see much else on the weekly time scale other than that. It looks like, look, ACEN, ACEN, look. This must be it. PSE, Philippines Stock Exchange, Energy Corporation. Take a look. Move to the daily. All right, I don't like this on the daily. Right off the bat, you pretty much today are having a death cross going on the moving averages. So that 50 moving average. Nick, what's up, dude?
Coming at ya!
What's going on, man?
I'm jacked to the test!
But yeah, you pretty much had a death cross going on here. Go ahead, throw a Fibonacci on this. Okay, reacting at the 886. Possibly at like a bullish bat harmonic. In here. Yeah. Okay, so you're at a harmonic. Nice. A bit.
Nice!
Catching a reaction. You definitely have locally the trend line that we're looking at. All right, bit of a falling wedge. Okay, it's kind of interesting. And looking at the oscillators, so here's the thing with the daily. All right, Sean Thomas Young. This is the thing with the with asset. So you do have Class A bullish divergence going on. You've got the lower lows happening with the higher low going on the MACD. The problem that you do not have it on the RSI. All right, so it would be like this, right? You just got a lower low on the RSI with lower low in price. So you might get a reaction here, and you might break out of this wedge even. That's your first resistance that you need to get above. You do have, we're applying some resistance lines. It's just like, you got to understand that you don't have the divergence on the RSI. So even if you do get a rally off of this MACD bullish divergence, it'll probably be weak. We've got the death cross impending. Okay, you are below this inflection point back here from July 13th. Okay, we're talking about it right here. You are below that. You do have some support here from August 19th. It's a little bit weak in my opinion, but that is where you are above seemingly what you're holding on to right now. I don't love it without the RSI, man. That's really one thing that I always want to see. See if the 4 hour's helping it out at all. All right, so the 4 hour, no surprise. But again, there's no divergence on the RSI. So again, it's just MACD show. All right. Even on the 4 hour, it's much more pronounced, the death cross that happened. So look, you're holding on to $8.56. From what I'm seeing, it looks like you might get some relief up here. And honestly, you've already reacted off of the the bullish harmonic, and it's kind of sad, right? You reacted, you came up, you were treating this peak back here from July 13th as resistance again before coming down to try and hold this support from August 18th. You did for a little while on the previous 4-hour candle, but now not much is happening. So look, you fall below this point of $8.56 and you likely head down to like $7.80. Okay, and the way that I would size this thing up is it's like if you're looking to take a long position here, you would do something like this, right? And yeah, you could put the stop loss. I mean, the stop loss really, you'd want to go below point D, but your first target's going to be, major resistance right here at $9. Okay, you're going to be at the trend line, you're going to be at horizontal resistance, and you're trying to do all of that without any help on the RSI after death crosses are popping up.
Nope.
No thanks. Not unless you're seeing something I'm not seeing, man. Not something that I would be interested in right now. Okay. EC Energy Corporation. Yeah, Filipino Energy. Don't know anything about that, but as far as the charts go, maybe the weekly looks a little bit better. Yeah, so look, you've fallen below the 50 moving average. Dang, man, they had a pretty good run. They're not in a bad trend, honestly, but you're now below the 50-day moving average for the first time, I think, ever in the history of this asset. It's just not a huge fan, man. All right, there's just a lot of work that needs to be done to get out of this downtrend. Once you get out of this downtrend, if you don't just continue selling off, then come down and hold this as support, right? Then we can talk about taking a long position on it, right? But you are literally at the strongest resistance. Okay. Wait for a breakout. Patience required. I don't know if it's going to get it, but we'll keep an eye on it. Go request, man. All right. Move it to Binance Coin. Nick, what's going on, dude? How's your Wednesday going? Say, man, you got a joint? No?
It'd be a lot cooler if you did.
All right. Got it, man. Yeah, absolutely. Yep. All right, so let's take a look at Binance Coin here. So, same kind of thing on the daily. Hidden bearish divergence, negative momentum is just continuing to build. You're not oversold or anything. Coming down and treating, where we at, like 347, 350 as support for a little while. A day before doing the same kind of thing, right? Most of the big cryptos, it'd be a lot cooler if you did. Yeah, that's right, dude. Yeah, man, I've been in the lab cooking up some sound bites and whatnot, but yeah, man, upper wick kind of crap. Same kind of thing, trading the 50-day moving average as resistance. I mean, really, since December 27th. So you're just below all the resistance again at this point. You've double topped up here at what was once support. All right, these are just classic bearish signs when you're treating support as resistance, falling through supports. Yeah, I mean, you're down at the lowest point of the sell-off that started back in November 9th. You're back at the lowest point, so you need to start pivoting now. Sure, okay, you could argue that there's class A bullish divergence if it starts to pivot now. It hasn't yet. It's still solid red, solid negative, and you have further to go. It's not even like you're oversold or anything on the RSI here. You could certainly continue down into the oversold area, at which point you would be down here in like the 320s. All right, you'd probably come back down to this major low back from September, this wick low, 318. Okay, do a full reset of that September low. Before really, I mean, we could throw a Fibonacci on this thing. Right, the 113 lurking around down here again. So That puts you down to like 272, 269 if you break below 318 before getting to the full reset of the July low back at like 256. Okay. Take a look at the 4 hour. Was anything going on besides hidden bearish divergence? This high right here didn't even get any kind of positive momentum before creating that lower high. That is disgusting. And continuing to sell off. If we were looking at this as if it did go green, it would be something like this. Okay, here's the high on the RSI. You can see it poking through, something like that, right? So just continuation under the downside on the 4 hour implied. All right, 4 hour about to get a death cross directly after a golden cross. Just gross.
What the hell is even that?
Yeah, I've been immunized.
Not nice, man. Especially not if you want.
We want more money.
You might need to wait a little while if you want more money from Binance Coin. Okay, unless you're shorting or something. All right, there's no argument for bulls here. It's bearish divergence. Okay, it's death cross. It's lower highs, double tops, all that kind of stuff. And the easiest way that you could tell, if you have a hard time telling the bearish indicators, Alt-I, flip the chart upside down. Like, look how bullish this looks. Okay, this is upside down now, but the lower trend line just holding like a beast. Golden cross incoming after a failed death cross, right? Double bottom stuff, dude. The continuation to the upside, in this case, it looks fantastic. Look how good this looks. Sadly, that is not the case in the reality. We are actually here. Not bullish, man. How has Cardano been looking? We'll take a look at it. It's been immunized, dude.
Yeah, I've been immunized.
It's been immunized for sure. All right, it's like... It's loyal. Buy later. Wouldn't want to buy later. We'll take a look, though. But, yeah, Binance Coin looks like it wants to head back down to its lows back from January 25th. Down around 334 first before getting back to that major low back from September 26th at like 320. Okay. No, it can't be immunized. Yeah, dude. All right. Let's move it to Cardano. Let's take a look at that now. 86 cents. Okay. And you've been here. You've been around. You know I talk about it every time I go live, which is Monday, Wednesday, Friday, Sunday, by the way. Below $1 is basically certain death. Okay. You're at 85 cents. You were at 86 cents. Last time I checked, that is in fact below $1. Quick math.
Nice!
It basically means certain death. Okay, so the only thing you should really be doing with Cardano is shorting. I get it. On the daily, it's like, yeah, but dude, look. Class A bullish divergence is starting to form. And here's the thing, right? It's not just going to go direct. I mean, it might, dude. For how significant $1 was, it's not going to go straight down. It'll do this kind of, dump and a dump and dump before it gets down there. So it might do that now, right? Come up and reject $1 for the first time. If it comes up and rejects $1 and confirms rejection, it might, honestly, go down in one day, 60% in one candle, and go straight to 40 cents. Okay, 40 cents being the peak back here from May 4th of 2018. Yeah, dude, it's like $1 an hour.
Are you guys having a killer time?
$7? I have, man. It's all I have. But, yeah, that might be exactly what Cardano does. If Bitcoin gets its dish together and can start to get up there. It looks like it even tried today before just upper wick garbage at $96.
No.
Straight up just slapped. Back down to now 86 cents. Terrible. And the reason it's so terrible, I mean, I don't really need to, I think you could see it, right? How many times $1 was touched and held and just psychologically, but even just looking at the weekly, right? Like, where's the support on the weekly? There is none. It was straight up. From 40 cents to $1, it was literally straight up. mean, it was up 91% that week. The following week, another 27, then another 30, then another 20, right? So it was up a lot in a very, very short period of time. And once you get into that zone where it's just straight up and there's no support looking left, dude, usually it's straight down. All right, and even if we're just talking wave structures here, this harmonic, this is a pretty nice looking bullish shark that we have here. So, dude, get it down to 40 cents, get that support, and get to the pattern completion zone of this bullish harmonic. A good one, too, right? It's not even like a crab. It's a 618, 1618, 1272 to the 886. Ugh.
Nice.
Children Brian. No, I don't think so, man. Is it the, you have a beard? You have a fabulous beard? I haven't had a beard in my entire life. And, first time I've started growing one. Process. I haven't, though. I haven't. That would be new. That would be a new one. Hopefully he's not a weirdo. But, yeah, dude. The 886 pattern completion zone of this bullish shark. Oh, man. That could really be the dream if it looks good. But, yeah. Look him up. All right, I'll do that. I will look him up, and I'll post him in the Discord, and I'll, like, put a side-by-side or something, right? We'll have a vote. But, yeah, Cardano, see you 40 cents, man. Okay. No, you don't have any kind of hidden bullish divergence on a weekly time scale, so no continuation implied over the long term. And, so even like, look at this, right? John Thomas Young. Look at this. Kind of going back to your Philippines thing or wherever that was. You have it on the MACD kind of forming, but you don't have it on the RSI. So that right there just kind of tells you, like, the MACD might be a trap, right? Might be a little bit of a trap. Maybe you do get a little bit of a rally.
Maybe you do.
Maybe you do. But eventually you're going to have to step away from Sergeant Sullivan and come back down and continue back down, all right? You don't have it on the RSI. Weak reversal stuff at that point, all right? We laugh at that kind of reversal. Understand what I'm saying? That's Cardano. Nick, hope that helped you out. Don't touch this crap. All right, even on the 4 hour, moving in a little bit. Hidden bearish divergence, I can already see it. Yep, hidden bearish divergence, right? Lower high going on, higher high. And here, like where you don't have it on the bull side on the RSI, you do have it on the bear side on the MACD and RSI. So continuation in the short term to the downside, breaking below 81 cents, most likely heading down inevitably to the 40 cent mark. See what I'm saying? Okay. But hey, man, again, it's nice to have this stuff plotted and ready so that if there's always a chance that Bitcoin reverses or something, I don't know, and pulls Cardano with it, I guess. But in the event that that unlikely scenario doesn't happen, we're ready for when it gets down here. Because if you're just listening to the news, by the time the assets get down in this level, it's all just crypto's dead. It was a scam from the beginning. I told you so. It's probably heading down to 14 cents, yada, 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 right? And if at that time you're getting the divergence and all that stuff you want to look for, you don't have to listen to that crap, okay? Gold is good. Silver is much better. But we'll take a look at both. Do you know who this guy is?
I love gold.
You know who that is? Goes by the name of Pete. Right?
I love gold.
Yeah, Cardano is the embodiment of the banker from South Park, right? It's like if there was a you don't know Peter Schiff, dude? He's a legend in the crypto space, legend just in the investing space. He gets a lot of crap because Pistol Pete, you got it, Jobin. he gets a lot of crap because he doesn't like Bitcoin. He thinks Bitcoin is trash. He thinks it's a big bubble. He has never liked Bitcoin, and he always tells people to buy gold. Don't put your money in Bitcoin, put in gold. That is like what he's famous for, kind of. People forget, though, that he really did call the housing bubble back in 2006, 2007. I watched like an entire montage on him the other day, and just watching him go on CNN, Fox, Money, all these different places. They were all calling him a kook. They were saying he's out of his mind. They were saying, he's just a perma bear, has no idea what he's talking about. Things are strong, yada. Like, people just gave him so much crap for the longest time, and he turned out to be exactly right. So I don't agree with him on crypto. I think crypto is here to stay. It's just like the future of finance. Right? It's the evolution, the next evolution of currency exchange and how we do finance. But I have a huge respect for him as far as what he talks about as far as capitalism and economics and stuff like that. He's a smart guy. I think at this point he's kind of molded in with the persona of being the Bitcoin bear, right? He likes it. He puts out some dumb stuff, some dumb tweets sometimes, but I do respect the guy, but we got to make fun of him, dude, right? He is the gold guy. He's gold member. All right, but as of right now, gold is doing okay, so this is his time to shine. Let's take a look at it, actually. Move it across. Move it to gold on here. All right, so here's gold, man. It's just been, see how everything else has kind of been selling off and meeting the trend line and rejecting off of the trend line, right? Continuing the downtrend. Gold broke out. Gold broke out of its trend line back on February 11th, right? And it hasn't looked back. Been pretty damn good, and that was off of some hidden bullish divergence that it had back here early January. So, off of the 250-day moving averages. So really good, broke out. Yeah, and now there's no bearish divergence or anything going on. It's at this peak from June 1st, so 1,918. That is a strong resistance level, which it'll likely, starting to wane back to the negative. It's overbought, right, which is not necessarily a bad thing. But yeah, it'll probably do this. It will probably come back down to test this peak at 1,878 as support for the first time ever. I think for the first time ever, right? It'll come back down, test that as support instead of resistance before continuing its rally to the upside, especially as long as market conditions stay the way they are, right? Uncertainty. There's war and inflation and uncertainty. Investors move their money into metals, gold, that kind of thing. So gold looks good. Continuation looks fine. Let's look at the weekly. Just building, not overbought, right? Just accumulation. Yeah, you get above this peak back here at 1918. I really don't see much until like 1963, maybe. These ones right here. I could consider that. Next target, 1966, and then of course the high. Oh wow, yeah, look at this. So you're currently at where you are literally at right now is also this peak back here from September 5th, 2011. So multi-year levels you are at, and I mean, good lord, this almost looks like a giant cup with handle. Not really, but it kind of looks like it. Yeah. Which I'm not even gonna. I'm gonna do like the measured move, but it's not even. It's too sketched up to really be like a cup with handle that big. A decade-long cup with handle. But yeah, I mean, you get above that support. I kind of take this line back. You get above that support from back there. That is so significant that I think it's straight to like 2081. And beyond that, the way to target that would be Fibonacci from that high to the low. And we'd be looking up here around like the 1272s, that kind of area. Maybe even get a little harmonic in here or something. Where's this at? The 618. 6. The crab. Yeah, why not? Feel like a crab. All right, and that puts it up around 2,331 on this wave. All right, to get a nice little crab, that'd be cool.
Crab sticks do not actually contain any crab, and from 1993, manufacturers have been legally obliged to label them crab-flavored sticks.
The informative crab.
Okay.
All right, that is gold though, man. Looks really good, but what looks better? Silver. Why does silver look better? Look at what it did literally today. Okay, broke out of the trend line you've had going since May of 2021. You broke out of it today. All right, not only did you break out of that trend line, you broke out of the 200-day moving average that you have also been regarding as resistance since August 4th. So it's like a 2-for-1 on silver. You broke the 200-day moving average, and you also broke the supply line, the upper trend line. Really good. And it's, I don't know, it could either, you know, explode, pop off, or potentially treat this inflection point here as resistance, come back down, and then hold the 200-day moving average and the trend line as support before going. That is likely. That is more likely, in my opinion, what's going to happen. I don't see why, after hitting bullish divergence, looking very similar to what gold did, just kind of in the past, right? Gold's a little bit more progressed. Yeah. Looks good. Further to go. 25.32 once it gets above this peak back here. But, dude, breaking those two things is a big deal. Like, you think this peak is going to be the thing that stops it after breaking month resistance? I don't think so. So get back to this inflection point from November 16th at 25.32. Break that 26.25 until your major high up here at like $28. We're looking fire, dude. That's right. Absolutely.
And it's gone.
Fine-hearted. Lightning in Pierce Cup. Frosty. Yeah, man. Silver looks really good. Really good. Definitely some more upside on silver. Okay. Move to the weekly. Positive momentum continuing to build. Like, just look at the weekly, too, dude. Look. Right to these inflection points back here. These major peaks. How it came down, just touched it ever so tenderly, once, twice, holding, and on the second time it had Class A bullish divergence on the MACD and on the RSI, all right? And you haven't even gone up into you haven't even gone above this high back here from November 8th yet. All right, so, dude, it's just pretty nice. That's a strong level because you have this inflection point as well from August 26th. So, that's the next spot. Really, though, after that, yeah, then I would say 26, 25 just because of this right here. 1, 2, 3, 4. All right. That was a major support, which often acts as resistance on the way back up. So, nice, man. I think on the weekly, too, the weekly's right at its 50 moving average. So, you definitely want to continue to the upside and get as far away from this 200 moving average as you possibly can. But that's a strong candle, too. And it had good volume. Let's go. That's a strong breakout by every metric that you can look at. Makes sense? I wish this would just stay on time frame I put it. What else, dude? Anything else? What else you got for me? Take a look at Luna. Luna was actually top performer on the day. It ended up That upper wick is gross, but it ended up, what, 8% on the day? 8.8. So Luna's actually been pretty good. Luna's one of the few that's also still above its 200 moving average. Holding it very well, especially after reacting off of this this Bartley that we have here. This is not almost a Gartley. It was at the 786, but went down to the 886, the 200 moving average. Dude, this has some pretty nice confirmation of support. Now, the issue that I'm seeing here is that it got up to the 50 moving average before immediately getting back below. So, look, I don't see any kind of bearish divergence, locally at least. Certainly do with this high back here, right? This little wick, this guy. So if we're talking about this, even if we put it all the way over here, all right, that's the high that you really needed to get above to wipe out hidden bearish divergence of this trend down. So, let me see, actually. Yeah, look at that, too. So, this is the third touch of this upper trend line on Luna. So, you wicked up to it almost perfectly before rejecting back down, right? Testing it as resistance, confirming it as a real resistance trend line. Yeah, it's likely that you come back down to about $50 down here to try and hold the 200 moving average again. But look, the 50 moving average starting to really pivot to the downside now, looking to want to intersect with the 200-day moving average. So just let's take a look at the 4-hour to see if there's any kind of help there. So again, it's like there's no bearish divergence. This is a massive shooting star candle right here. A little bit of a big body for a star, but that long upper wick is not what you want to see. But again, man, there's no bearish divergence or anything. So it's just definitely want to break that trend line. Okay. You break that trend line, yeah, it's likely you head back up to like $80. Let's say that is this high back here from December. So break the 50, break the trend line, and $80 is probably the next target. But dude, I don't know how much longer Luna can hang on if Bitcoin can dump and the overall market continues to dump. It's been outperforming for sure. All right, which is great. But it's like you got the reaction off the harmonic. You came down to confirm the low. This is exactly what you want to see before now just wicking down off the 50 moving average and the trend line. We'll see, man. We'll see. We'll see what tomorrow looks like for it. But I just don't have a lot of faith in anything. Okay, let's take a look at the NASDAQ. Yeah, so here's what we're looking at on the NASDAQ. Already, we've been talking about this, but the death cross that happened a few days ago, bad. But now, you can see with your eyes here, one, it's a bearish engulfing candle. So it opened above and then fully engulfed the prior candle, closed below. Not only did it close below the lowest wick that we had back here from January 24th, all right, down in this support level down here. So, dude, lowest candle close that you've had since May 12th of 2021. Terrible. Hidden bearish divergence continuing to develop. Negative momentum continuing. Now you only had it on the MACD. Not terrible. It's a little bit wonky given the fact of this guy here. So it's like that the bearish divergence argument for it. But dude, closing that candle below that support is not good. Especially with hidden bearish divergence on the daily like that. And then we move it to the weekly. And again, it's the bearish engulfing from this weekly candle, February 7th, tweezer top at the 50 moving average, and the weekly, at this wick low. It's like tomorrow it has to get back above this low. It has to rally here. If it doesn't rally here, then it goes all the way down to 12,435. Really, from the COVID low, the golden zone, the 200-day moving average down here, in real bearish conditions, that's where we head. And that's like 35% off, which that might be the low. That might be the reversal. It did it during the COVID crash. It's held above the 200-week moving average since August of 2010. Okay, so falling below the 200-week moving average hasn't happened in a decade. So if that happens, yeah, I mean, 786 and like 8,696. I don't even really want to think about that. Maybe even the peak of the COVID crash down at like 9,845, maybe 10,000. Keep it psychological, but you do not want to get below the 200-day moving average. Or I'm sorry, 200-week moving average. That would be a long time of suffering, pain, unless you're shorting. You make money and that kind of stuff too. Even and then, you just move to the commodities and gold and silver and all that kind of stuff, and there's always money to be made. But you don't want to be touching tech. You don't want to be touching Tesla. You want to be touching SoFi, whatever you want to call it. Let's take a look now at Russia real quick. That was the Ethereum here. That word. Medved is bear in Russian. Okay? See how clever I can be? Look how disgusting Russia's S&P 500 kind of. This is 2 times. This is leveraged a little bit, but red. All right, down 17% on this gap back here from February 22nd was also down 17%, 10%. So I mean, since February 16th, the Russian market is down 46%, right? And look at where it stopped. Support back here from October of 2020, October 30th. Let's see. Let's move it to the weekly. This is really big. And I mean, is it surprising you're invading another country and you've got, the most powerful country in the world slapping you with sanctions, going out of style? I guess. Putin's just standing in the hallway like, how can she slap? How can she slap? But, yeah, added support. Let's see. You don't have any hidden bullish diversion, Putin, sorry, on the weekly. Nothing. Higher levels of negative momentum, lower lows going on. Yeah, it could be really bad for them, man. With this kind of crap, I don't know. I can't foresee I can't measure out the negative impact of sanction on a country's economy and war. Okay, it could literally just dump down to 5. I really don't know. All right, that's the leverage one. This is the Russia ETF, VanEck Russia ETF. I just diversified throughout a bunch of Russian assets. It's the same kind of thing though. Yeah, it's like the same thing. It's just not as leveraged. It's not as leveraged. So this down 9% as opposed to 18, 17, 2 times. 2 time. Frosty. But same kind of thing. So the Russian market, man, you're gonna come up and fill the gap. Fill the gap, Putin. Actually, see if here. From the COVID low back to the week. There's no harmonic or anything. Sure, but let's throw it from the low to the high. Where are you? You're coming down to 786, okay? So it's likely that you come down at least to 1768, which is a support back here. All right, some confluency from 2009 back here. All right, so good God. Good luck to the people of Russia. Not sad, man. Like, they don't really have much of a say. This kind of stuff, right? This people making decisions that affect them directly, and people in Russia have retirements and stuff too. I'm assuming it's like their retirement funds that they've, you know, worked their entire lives for, are just gone. They're just getting wiped out. If you saved up 1 million rubles over there, I mean, probably like $1 billion. If it was $1 million, it'd be like 5 billion rubles. Working your entire life, and it's like, it's finally time to retire.
Money.
And then, you know, your leaders just come in and it's just like,
Psych!
we're going to war. Sorry, your portfolio is now going to be down 50%. So, whatever you were planning on doing, plan on doing it without your significant other. Only one person can go now. Decide who it's going to be if you don't get drafted. We're not buying this crap anyway. All right, so take a look at the SP. So, same thing, man. All right, 500 below this low back here from July. Definitely below the support that we had where this harmonic started, right? This low at like 4,282. So just, we're crap. There's potential for Class A bullish divergence to form at some point. You are at this wick low from January 24th. But like with just a super solid red candle. Like it's just, you'd want like a lower wick touching it and then coming back up or something. Testing it, holding it as support. You don't want this strong of a candle when we're going up against a little wick like this. It's not at all what you want to see. And again, you're above the 200-day moving average for a little bit, and now you're way back below it again. Now you're below supports that you haven't closed below in, since July. So it's just like more downside. I don't see how you could argue like right now, like, oh no, I think we're gonna reverse here. The market is strong, and we're gonna reverse. All right, I think we've seen the worst of it. It's like, what are you talking about? You're not oversold even on the RSI, right? This could be weeks. We could get 3 weeks of just continued downside, and there's no like support really that I can see until even know. There's not like any discernible highs or lows to act as support. The only thing is, like, again, down in the golden zone here, that's where the 200-day moving average is. All right, and that's down around $3,500, which is just a further 17%, which off of the high would be a total of 7%. All right, and that's straight up bear market. Anything over 20% is a bear market or a recession. Okay, 10% is a correction, 20% recession, bear market. And it's not like a news-driven thing, right? If we're talking inflation that lasts a while, not like a COVID crash and then people calm down because they realize it's not the Black Plague, but it's like recession, a slower pain and growth, and takes months for it to kind of fill out. If ever, really, there could just be a total collapse, to be completely honest. I don't know that they know what to do. 2 months ago, they were saying it was transitory inflation. Now it's like, no, we have to raise rates. It's not transitory. It's like, come on. Did you really believe that when you said it 2 months ago? No, you didn't. All of these guys need to just laugh. Oh, out of here. All right. I don't think any of them are in there.
Yeah, I've been immunized.
So, we'll see, man. But yeah, I don't know. Next support on the daily, at least, maybe down here, 4,060, something like that. And the 236 is kind of confluent with this little divot right here. That's at like 4,150. So at that point, does that officially put us in like a bear market? Where are we at right now? Hold on. We're down about 12% right now. A little more than a regular correction, which again is just 10. So if it was just a normal correction, it should have started to, the correction should be over and it should be moving back towards the upside. It is not doing that. All right, so once it gets to 3,847, officially a bear market. That's right around the 382, which is like a moderate retrace in the grand scheme of things. Okay. That's pretty much it. Can do it. Is anybody in here who wants me to take a look at something else? This is gonna be the last call. Okay, I'm gonna move back to Bitcoin real quick. See what we're doing here. On the day, down about 1% already. Negative momentum continuing to build as of right now. 4 hour getting any love? Nope. The hidden bearish divergence just continuing to develop.
Nope.
One hour. Any body lower than 36,553. So any low lower than right here on the hourly time scale will wipe out the potential for hidden bullish divergence on the hourly time frame, right? Whoop-de-doo, but you know, we're trying to get anything we can at this point. So it's like even if the hourly is not getting bullish signals or anything like that, like the dump is kind of just imminent, right? If we're like grasping for straws here and we're hoping that, you know, this will hold, that 36,592, this support, or not even that, what below it now, that 36.6, whatever this is down here, that'll hold. Yeah, you're not even getting help on the smallest time frame, which would usually just give you like a little something like this, right, before rejecting, or at least try to get you back up to the resistance to test it and try and break it. I don't see anything. I don't even see anything on the hourly time scale suggest that you're going rally. With what the Nasdaq just did, the SP 500, we'll see, man. It just, the overall market these days looks like it wants to dump. Nasdaq looks like it wants to dump. Bitcoin looks like it wants to dump. Nasdaq looks worse, but we'll see. I'm gonna get off. That's it. Talked enough to you people. An hour and 12 minutes. Everybody that was in here, Sean Thomas Young, Nick. I don't know if that's your full name. That's like your real full name, Sean, but I would recommend not putting your full name, even your middle name, on online. Way to get looked up, you know what I mean? But yeah, Nick, anybody else in here, appreciate you guys being here as always. Hope this was helpful. Go ahead, hit the like button, the sub button, right, if it was at least somewhat entertaining. Join the Instagram, the Discord up there. Link is in the chat at the top. So go ahead, jump in the Discord. Lots of educational content, trade setups, whatever. Just in there, we're just hanging out, having a good time. But yeah, I will be back on Friday. You guys have a good night. Remember, keep it real, keep it fresh, keep it chill. Keep it, I don't know, copacetic. I go one. More important than any of those, as always, never forget, keep it technical.
Frosty!
Purple.